All right, everybody, we're going to get started. It is Monday night, October 22nd, about a half an hour after the stock market closed. You can see that on the screen here, Real Battle Prizes, Day Trader Challenge. That is where you're going to log in after you watch this video to play the all-day game for tomorrow. It's actually Tuesday, not Wednesday. And we're going to get started. So first thing we're going to do is take a look at the market itself. And actually, you know what? I'm going to shoot this out to the 60-minute chart where we had a really solid push down last week. We had consolidation that broke out to the upside, another consolidation that broke to the downside, and today was basically a day of the market digesting news going on with Russia. We also had the minutes come out from the earnings in Goldman Sachs, which hit the financials a little bit. So as you can see here, we had a pretty mixed market in the top stocks that are what we call the stocks in play. What's interesting today, which kind of sometimes just makes absolutely no sense, is the tech stocks that were weak were really strong today, and the financials that were strong were weak today. But you know what? It is what it is. Nothing you can do about it. I actually had that trade call in Goldman Sachs today, and I said if it broke down, I was going to let it go. And after you can see here on the bottom, the transcripts of the earnings from the 16th came out. We actually started to trade lower. And I'll just go over very briefly what that trade was in case you happen to have missed today. And essentially it was what we call a double inside day, inside of another inside day. So inside of these 2 days. And the trade was looking for momentum move to the upside, especially after we came out of this inside day. Gapped higher after earnings, followed through, and then consolidated. I actually was looking if we broke to the upside to get to this 238 level as the first target. Maybe a little bit of minor resistance here, but the minutes came out and the transcripts, and we started to sell off. So one thing that's really interesting is the VIX is also coiling. We had this monster spike up on the day that we got hammered, the 2 days actually. This was the big down day and the following day, and we kind of pulled back, but now we're consolidating. And what this actually tells us, even though it's not trending the way it was here, because normally if it's trending up or down, just so in case you don't know, if the VIX trends up, that means the market should be going down based on fear. If the VIX trends down, the market should be going up. So we had this massive spike, and now we're consolidating. Even though it's inside day here again, as well as in the VIX, we've essentially been consolidating for just about a week. Which that absolutely means that we're about to have a massive move again. What's interesting here as well is the VIX could not get above this level for the longest time, right around 15. And the market pretty much went sideways and chopped around as well. As long as we stay above 15, and especially if we get above 20, we can expect to have much wider price swings, which that translates into adjusting your contract size. It translates into adjusting your share size lower to compensate for bigger moves. It's just really solid, good trade management when you pay attention to the volatility, when you pay attention to the average true range. As the VIX expands, as average true range expands, you should expect that you're going to have wider swings for your stop loss as well as your profit target. Obviously, to the upside, it's good as well. So that means that you should risk the same dollar amount, if you choose to risk it, with lower shares or lower contracts to compensate for having a bigger position. So I just want to make that very clear. That's what's going on in the VIX right now and how to interpret it. So what we're going to do now is we are going to, again, let's just get a recap on the market. The market actually closed lower. So we actually broke out of an inside day and to the downside, with the next support all the way down here, but the majority around 272. So we have roughly $2 to go down to the next support. Look, the bottom line in the market right now, I don't care what anybody's looking to tell you. Here's the best way to explain it, and I did this in a presentation last week. We have long-term bullish order flow. So again, all of this buying was committed to the market to move it from, let's call it, 269 to 294 ballpark, right in that area. Right? So there's a lot of buying that went on in this window here. Some distribution took place here, but here's the thing you want. I'm going to first quote so you write it down, but then we're going to read a little deeper to read the tape. So we have long-term bullish order flow with short-term bearish momentum. Okay, so there's a conflict in the significant time frames that we watch. Best case scenario is bullish order flow with bullish momentum. Those are the times when you can really size up. And here's a really advanced lesson. And actually, you know what I'm going to do? I'm going to remove this here, and I'm going to remove this so we can see the charts because it's kind of important. So what I want you to focus on right now is look at the bullish order flow, okay, much longer time frame, and look at the amount of green candles. And green means that the price action closed above the open. Okay, so it opened here, closed here, opened here, closed here. So a lot more green professional closes during this bullish run. Now look what we started to get over here as we started to turn around. We started to get indecision, and indecision meaning smaller candles and more frequent closes below the open. So we had professional bearish closes. So this is kind of like the way I explain this in the coaching is you're basically making the difference between reading the notes and playing the song. So if you could just look at a chart from the bigger picture, that's kind of like looking at the song. But if you start to read the notes, you start to understand the song a little bit better. I know that sounds corny, but it 100% is an advanced lesson. So you can start to see over here, we start getting a lot less green candles. We start getting a lot more indecision where it opens and closes, and especially start getting a lot more red candles where we're closing below the open. And that precipitated this monster move down. Now, what did we end up getting in the last 1, 2, 3, 4, 5, 6, 7, 8 days? We had one green candle, which was basically an overreaction to the upside after we got hammered these 2 days. So a couple of days of consolidation and then a bounce. Then we get another indecision candle, close below the open, close below the open, close below the open. So what you're learning right now is what's known as tape reading from me, where you do a lot more than just look at the high, look at the low, look at the trend. You actually start to pay attention to what's going on. Now, this implies we're going lower. Implies we're going lower in the short term. And that's a big distinction because that's going to affect how long you hold your trades. We don't have long-term bearish order flow. We have short-term bearish momentum combined with some short-term signals that sellers are controlling the close. So you would go into the day saying the short side of the market has a slightly higher probability because of what's going on recently. You would trade for cash flow to the short side and to the long side if you chose to trade one of these stocks that were strong. You would not be looking to build a position because of the conflict between the long-term picture, the short-term momentum, and the last couple of days. That's a really advanced lesson, and I hope you take that one and take some good notes because that's not something very many people learn. So you just got a really good lesson there. So what we're going to do now is we're going to jump into the stocks in play for the Day Trader Challenge, which is tomorrow, and we're basically going to take a look at Goldman Sachs here. As we said, we had the double inside day. We were looking for a move to the upside to retest the 238. We did not get it. We actually got a push to the downside. So again, a lot of conflict here, and if anything, we got a breakdown coming out of consolidation. You would actually expect that to trade lower. I would probably not. There's no order flow and no recent momentum. I'd probably step aside on that one. Amgen, what's interesting here about Amgen is we actually are making lower lows and lower highs. So we got lower high, lower high, lower high, and topping tails when we started to push to the upside. And we broke out of this topping tail to the downside for a really solid trend day. And we did break the uptrend here. So I would say that this is if I had to put a number on it, I would say a 7 at the best on the short side, because again, you're fighting all of this long-term price action to the upside, this long-term bullish order flow, but you have bearish signals right now to the downside. You know what? 7's probably even high. I would say 6.5, but I would not be looking to get long this stock at all tomorrow. So if I was forced to do anything and I needed a stock to pick, I would short this one tomorrow. But if I was allocating, and this is another advanced lesson, if I was allocating my buying power, it would have a lower percentage of my buying power if this was one of the trades that was the higher up on my list. Netflix, absolutely nothing going on here from a order flow or a obvious momentum perspective. If anything, it pushed down after earnings, after it was all the way up here, and hit support. So the short sale is not in play, especially after the bottoming tail, and there's no bullish reason to get long other than buying support, which is not a great reason. So I would absolutely do nothing in Netflix tomorrow. Same exact thing here in United Health, which actually was what's really interesting about this stock is every time it gets to this breakout level, it fails. Look at that. Basically, for a week over here, tried to break through again, failed, broke through, failed, broke through, failed, broke through, failed. Boy, you really are not making good trades if you buy that breakout until it gets above there and stays there for a few days. So as far as UNH, I don't see anything to do there either, quite honestly. You know what? Caterpillar is a really good example here of how am I going to describe this? Absolutely understanding that you're in a pretty decent downtrend now. You had momentum, pause, momentum, probably leaning towards another pause, especially because you had 4 days in a row now. What's interesting here is I definitely would be short based on the last 2 weeks. I'd look to short this. But because we're now in, let's call it day 4, tomorrow will be day 5 of closing below the open and bearish price action on an intraday basis, I would actually be looking, if you could, which you can't because you have to have your picks in early, but if you're looking to actually trade the stock, the way that I would be trading is I would not be trading a breakdown. I'd actually be waiting for the first rally to sell short. But either way, I do like this. But here's that example again of reading the notes to understand the song. Look at the green candlesticks here as the stock breaks out. Look at the indecision here. One more last push higher, failed breakout, and now look at the amount of candlesticks closing below the open. Those are professional closes, everybody. When you're paying attention to that, that is professional price action, meaning the smart money is selling after the market opens. That's the way to word that. That is an incredibly, incredibly advanced topic. But now that I've trained your eyes to look at it, you'll never be able to look away because now because what ends up happening is everybody's like all mesmerized by moving averages and that kind of stuff. But what did we just look at? We just looked at is smart money in control and how long have they been doing it? So as far as Caterpillar, I would definitely prefer to be short playing the game. I'd probably have less shares allocated because it might bounce early, but I would expect this to follow through to the downside. I wouldn't short the lows though. JP Morgan, very similar story to Goldman Sachs, except Goldman Sachs had a much better momentum move to the upside. Big breakdown here, 113 a couple of weeks ago, and now we're going from this swing high to a push down. Be very tough to short the 106 support. You can see it was actually support over here too before it took off. If I was forced to do something, I would say failed breakout, lower high, another lower high. I'd be looking for a leg down to get down to that 103. Probably going to be a little bit of support here. Plus, they actually had reasonable earnings. So it's a little confusing that they actually bounced higher, but interest rates going up, these stocks usually go up. But you know what? It's not our job to ask why. It's our job to pay attention to the price and just trade what we see. Home Depot actually had a breakdown when it finally got below this level here. And interestingly, inside day tried to break out, failed at the 194 level, pushed down. I still like Home Depot on the short side. We got next, CVX. I'm going to tell you what, I don't see any solid order flow, long or short. I only see these momentum moves, and I see a lot of melted candles where we open and close in the same spot. Call it a doji, whatever the heck you want to call it. I call them melted candles. I call them indecision candles because it opened and closed in the same spot. I will not be trading CVX tomorrow. Little bit, you know what's kind of cool? Look at how interestingly different Exxon is compared to CVX. At least in Exxon, you can see that there's a lot more institutional sponsorship where you're getting green and red candles as opposed to most of this kind of mess. So that's also a sign of which stocks to trade. And again, it doesn't matter if it's day trading or swing trading. That's a pretty good indication of whether or not institutions are involved because they're persistently throughout the day buying and selling stock to create these larger green candles or red candles. The only thing I don't like about this trade right now, which you can actually see a little ironically perfectly as I zoom out a little bit, I'm just going to pull this over, is that you can see that right now price action is pretty much smack in the middle of the trading range that goes all the way back to May. So I'm not really sure you can define an edge here. We're in the middle of the last, let's call it 6 months, 5 or 6 months worth of price action. So good example there as well is setting up probability and what we call trade expectations. So nothing to do there as well. Does look like it's going to trade lower, but I don't see an edge to the downside. We have some pretty decent support here in Micron. So tough to short support, and you can actually see that the market and the stock got through that level and could not. It actually bounced back up. It's kind of attracted to that $40 level. We also have 1, 2, 3, 4 days in a row of well offered with this pretty big support. Next level is down here at 34, so about $6 away. I probably, if I had to short it, if I had to trade it, I would short it tomorrow, but not with as much share size allocation as, again, for what I just said before, because of the 4 well-offered days in a row. So you got 4 days of selling that actually kind of bottomed out there with that close off the lows. Deer, I don't see anything to do here. And again, hopefully these are like so obvious now, screaming. Look at all these melted candles. So inconsistent institutional activity. You want the institutions to be active consistently to push those stocks around, so nothing for me to do there. What we got going on here in Boeing, BA, I'm going to say nothing going on here as well. Momentum breakout, momentum fail, and consolidation. Roku, not bouncing. Interesting. Let's see, gap fill here down to 52 at the next level down here at 44. I'm actually okay with shorting this tomorrow, but again, because you have support here at 52, you only have $2. So if this actually opens lower into that support, there's not a lot of, and I'm really going to highlight this for you just so you can get a visualization of it. Actually pull that down. So it was resistance here. It acted as support here, and it's not that far below here. So you can see we're right around 54 now. So the short sale tomorrow into the 52 level is what makes sense. For me to want to short a little more aggressively with expectation for follow-through would actually be down here. Walmart, a choppy mess. I do not see an edge here at all. Again, how do you describe this when you're talking about this to yourself? Again, Walmart, you're basically saying to yourself, institutions agree this is the right price. There's no obvious buying or selling order flow right now, other than this gap up that's held. Long term, that actually looks better. But short term, where we're swing trading, short term, where we're holding something all day, very little edge here. Now, you can definitely make the argument that it bounced through this level, failed to break out, and will probably roll over tomorrow. I could see that argument, especially if you have a lot of discipline to kick the trade out. However, seeing your stop loss is not the same thing as a high expectation for your profit target to be hit. They sound like the same thing because you could short sell support, and that's where it's failed a couple of times. But that's not the same thing as expecting something to follow through. Sounds the same, not the same. Can justify the trade on the short side because of this if it gets below 97, but not higher expectation. Very big difference. As we talked about, if you caught the meeting we had the other night, we said there's a big difference between not wanting to be fat versus wanting to be healthy and fit. They sound like the same thing. They're not. Let's see, Broadcom AVGO here. You know what? I'm going to make that a little bit so you can see it again. I just wanted to remove that so that it wasn't in the way when we're looking at that particular stock. So Broadcom AVGO. Again, sticking with that same theme, you know, if you look back, we're at support here. You got some room. I would say below this 228, 227.50 level. You can see you tried here 4 different times, couldn't get through that. Tried again, tried again, tried again. Boy, if you had to pick the stock for tomorrow, it's got plenty of room to the downside, all the way down to 205, so almost $25, $26 in room to go if it goes down. If I had to do something, I would prefer to be short because of the failed breakout, the lower high, the push down. It's got to get below this 227.50. So again, if I shorted it, it would have less allocation of my buying power. Twitter, I see absolutely nothing. Very quickly, you should be able to eyeball the stock and say, who's definitely in charge, buyers or sellers? Neither. Nothing to do there. Facebook, holding below. Let's see where this long-term picture is. Big support at 152. That's the last place that it rocketed higher. So very, very tough to be shorting into support where there's actually not a lot of room to go. So Not a great short sale, even though it's been down since the gap down. Support coming up, and basically in a trading range. Tomorrow morning, I would say do nothing. That's what I would be doing. Let's see, IBM getting smashed after earnings recently. So the sellers have spoken and pushed the stock lower. Inside day, so the trade tomorrow, very difficult to look for another short sale after the stock that's gone from 145 to, let's call it, 128 in just a couple of days. Hate to use the word oversold. Definitely, I like to use the word more succinctly based on what the stock normally does, and I would say that the stock has reached a saturation point based on its normal average trading range. But because we have an inside day today, we're going to look for an expansion in volatility. So in other words, we're looking to break out or break down out of this inside candlestick. So we're looking for a trend day higher, a trend day lower. Essentially, we're looking for it to break out, let the market tip its hand, and then we hop on board. A little bit more of an active trading trade. You can get involved with buy stops and a sell stop, which actually you'd place the order called OTO. One cancels the other. OCO, excuse me. One cancels the other. OTO is a marketing term, excuse me. Yeah. OCO basically means if one order gets filled, you cancel the other one. So you could use that if you choose to not need to be in front of a machine. Tesla is just a choppy news mess. I don't see any edge there at all. You can't look at the stock and say buyers or sellers are definitely doing something. Now, you can say, well, what are you talking about? We failed up here a couple of times at this level and got smashed. Lower high, lower high, lower high. Absolutely. But now we also have pretty big support here at 250. So last couple of times it's gotten down to 250. Once, twice, three times, four times, 5, 6, 7 times got down to this level and it bounced. So if you want to make the argument that the stocks are sell short, you got to be really aware of the short level that it has held. And what's kind of interesting about that is paying attention to multiple time frames. So you got to put those pieces together. Baidu, let's take a little bit look at the longer term chart here in Baidu, and another really good example of looking at your longer term charts. You think those prices don't matter? Once, twice, 3, 4, 5, 6, 7, 8, 9 times got down to this one, let's call it 190 level, and hasn't been able to break through. So if you want to say Baidu's absolutely sell short, I would kind of agree with you, right? Lower high, smash down, trading range, smash down, trading range. It would have to get below that 190 level before I'd want to short it. And then we have our buddy Amazon consolidating. And you know what? I am actually going to do a long-term potential change of trend drawing here for you. So in case you do not understand how to fully draw trend lines, and I'm actually going to remove this again so that you have a really good picture without the lines getting in the way, without the name getting in the way. When you draw a trend line from the lowest low, in this case, you do not want to go through any other price action. Where the price breaks, that is actually where you are considering that new price needs to be broken for a new change of trend. So long-term bullish order flow, trend breaks, let's call it right here, right? So it gets below there, establishes this new low. So what you would expect to have happen now is price action would go up and retest the high, which in this case is a failed test of the high. And if you took the order flow masterclass, you learned all this in the course, but this is kind of cool to have a real lesson. So long-term order flow, you don't cross between anything else. You break the trend line here, you draw a line, fully expecting it to retest the high. If it fails to retest the high, you expect this level to be broken, which it was broken. Bounce back, hold it as resistance. You would look at Amazon based on this chart to be looking to sell the short stock or protect your longs if you happen to be long from lower levels. Now, the interesting thing is here, again, if you took the class and you went through it, we are kind of sitting in that phantom zone right now between the 20 and the 50. And I don't even have to pull it up to know that we're there, which is kind of an area where the long-term price action is still valid, but is a significantly decreased trade expectation for follow-through to the long side because we broke this level. So how do you trade that? If you decide to trade long, you trade it with a lot less share size until the stock gets above this level. If you trade to short side, it's also with a lot less share size because you're the first pioneers, so to speak, to a potential new trend to the downside. So long-term bullish order flow, that's been a rocket, versus short-term potential change of trend where the long is not as high a probability for follow-through. So really, honestly, some just awesome trading lessons here today, just looking at these 25 stocks in play. So what I really like to do is encourage you to get into the game, go to the game tomorrow and sign up for the Day Trader Challenge, which starts tomorrow. And we'll see you. Have a great night, everybody.